Are you ready to navigate the financial rollercoaster of 2025? With markets overvalued, inflation persisting, and global tensions adding to uncertainty, holding cash might just be the smartest investment decision you make this year. Discover how this strategic move can protect your wealth and position you for long-term success. Mike's investment journey: why holding cash is a smart strategy for 2025. As the new year begins, many investors are evaluating their strategies for navigating the financial markets in 2025. Among them is Mike, who has always been thoughtful about managing his money. After observing the stock market's rapid rise in 2024 and hearing predictions of potential volatility, Mike decided to take a cautious approach this year. Instead of diving into stocks or other investments, he plans to hold cash and wait for the market to re-level. This decision, while seemingly conservative, is backed by strong reasoning. From market overvaluation and inflation concerns to geopolitical risks, economic policies, and the state of real estate markets, Mike's choice reflects a strategic understanding of current challenges and opportunities in the financial world. Why holding cash makes sense in 2025. Holding cash often gets overlooked as a valid investment strategy. Yet, in certain market conditions, it can be the most prudent approach. In 2025, several factors reinforce the case for preserving liquidity and waiting for more favorable opportunities. Market overvaluation. The stock market's impressive rally in 2024 has pushed valuations to historic highs. The S&P 500 and other major indices reached levels that many analysts consider overvalued. This poses a significant risk of correction, as markets often rebalance after such rapid growth. Investing heavily in overvalued stocks could lead to losses if the market dips. By holding cash, Mike avoids the risk of buying into a bubble. Instead, he maintains liquidity to capitalize on opportunities when valuations normalize. For example, during past corrections, investors with cash on hand were able to purchase quality assets at discounted prices. Donald Trump's campaign promises. Adding to the uncertainty are the economic policies proposed by Donald Trump during his 2024 presidential campaign. These include corporate tax cuts, large-scale infrastructure spending, and regulatory changes. While these promises could benefit specific sectors, they also bring unpredictability. For instance, significant tax cuts might boost short-term market sentiment, but could widen the federal deficit, leading to long-term instability. Similarly, infrastructure spending may create sector-specific opportunities, but could strain government budgets. In such an unpredictable environment, holding cash allows investors to remain flexible and adjust their strategies as these policies unfold. Inflation concerns. Inflation, a persistent issue in recent years, continues to erode the value of money. In 2024, inflation hovered around 3.2%, which is above the Federal Reserve's target of 2%. While this rate is lower than the peak seen in previous years, it still poses a challenge for preserving purchasing power. Mike's decision to hold cash takes this into account. Instead of letting his money sit idle, he plans to park it in high-yield savings accounts or treasury bills. These instruments offer modest returns while maintaining liquidity, helping to offset the impact of inflation. For example, a high-yield savings account with a 4% annual return could preserve the real value of cash better than a traditional savings account. Interest rates. Interest rates play a crucial role in investment decisions. The Federal Reserve slowed its rate cuts toward the end of 2024, signaling a cautious approach to monetary easing in 2025. Higher interest rates increase borrowing costs for businesses, potentially reducing their profitability and dragging down stock performance. For Mike, this environment makes holding cash even more attractive. With treasury bills and money market funds offering competitive returns, he can earn a steady income while avoiding the risks associated with declining corporate earnings. By staying on the sidelines, Mike can wait for the market to stabilize before committing to long-term investments. Geopolitical risks, Ukraine and Russia. The ongoing war between Ukraine and Russia continues to impact global markets. Energy prices remain volatile, supply chains are disrupted, and geopolitical uncertainty is high. These factors contribute to market instability, particularly in sectors like energy, agriculture, and manufacturing. Mike recognizes that investing in such a turbulent environment carries significant risks. Holding cash allows him to avoid sectors most affected by the conflict while staying prepared to seize opportunities when the situation improves. For example, during past geopolitical crises, investors who waited for resolution often found better entry points in the market. Impact of the real estate market. The real estate market is a key factor in Mike's decision to hold cash in 2025. Rising mortgage rates and inflated property values have made homeownership less affordable, while shifting work-from-home trends are slowing demand in suburban and rural areas. High price-to-rent ratios in major cities indicate that property investments may not yield expected returns, especially if the market corrects. By holding cash, Mike can avoid overpaying now and stay ready to seize opportunities when undervalued properties become available during a downturn. Benefits of holding cash. Mike's strategy offers several advantages, including capital preservation. Cash ensures that his wealth remains intact during periods of market volatility. Liquidity. With cash on hand, Mike can act quickly to take advantage of investment opportunities as they arise. Psychological comfort. Holding cash reduces the stress and anxiety of watching portfolio values fluctuate during uncertain times. Risks and mitigation strategies. While holding cash is a safe option, it does come with some risks. Inflation erosion. Inflation can reduce the purchasing power of cash over time. To mitigate this, Mike plans to use short-term instruments like treasury bills that offer modest returns. Opportunity cost. By staying out of the market, Mike risks missing out on potential gains during a rally. However, he believes this is a reasonable trade-off for avoiding potential losses. Market timing challenges. Predicting the exact timing of a market correction is difficult. To address this, Mike remains flexible and open to adjusting his strategy as conditions evolve. Looking ahead. Mike's decision to hold cash in 2025 reflects a thoughtful approach to navigating a complex financial landscape. From market overvaluation and inflation to geopolitical risks and interest rate policies, the challenges of this year demand caution and adaptability. By preserving liquidity and staying informed, Mike positions himself to seize opportunities when the market re-levels. His strategy highlights the importance of patience and preparation in achieving long-term financial success. For investors like Mike, the key to 2025 is not rushing into the market, but waiting for the right moment to act. Holding cash isn't just about playing it safe, it's about being ready for what comes next. If you enjoyed this video, you'll likely enjoy the other videos on this channel. Check them out to expand your financial knowledge and learn how to make the most of your money.